Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, SpaceX shares feeling gravitational pull as Musk company launches its debut bond sale. Plus, tech stocks sell off worldwide as Wall Street gets an AI wake-up call. Is the AI boom sustainable? And we go big on private markets. Menlo Ventures raises its biggest ever haul with $3 billion to back AI startups. Partner Venky Ganesan joins us on set in San Francisco. The headline on the Bloomberg is that Wall Street gets an AI wake-up call, but there has been a global sell-off in technology shares. It started Monday in the US, but in Korea overnight is where it was felt most. The Kospi, the best performing index in the world so far this year, dropping 10% from a record high. It is Samsung, it is SK Hynix, which led questions about the sustainability of the AI trade. Let's go over to the US session, where actually we're off session lows, but there is still severe selling. The SOX is down 7%. The NASDAQ 100 is down 2.6%. All of this about sustainability, durability of what's happening in AI. Our top story, SpaceX shares. The stock actually briefly dipped below $150, which was its trading debut price from June 12. We're getting new details on the company's first ever bond offering, a 5-part investment grade deal expected to raise at least $20 billion and rank among the biggest debt sales of the year. The sale would primarily refinance debt while also giving investors a fresh look at how Elon Musk companies are funding growth across AI, satellites and space. Joining us now, the team, Bloomberg senior markets reporter Bay Lipschultz and Emily Graffeo on the corporate credit side. Let's start with you. What do we need to know about this debt sale, the structure of it, the terms?
Well, look, we need to know that this deal is probably going to be one of the biggest investment-grade bond sales of the year, and it already got $30 billion of demand even before the deal was announced. It's pricing later today. Bankers are taking orders from investors right now. We do expect the deal to go pretty well. So even though the stock is down today, Ed, this bond sale expected to be successful, and it's getting an investment grade rating, despite the fact that SpaceX is saying it's going to be blowing through cash here. Really what the ratings analysts are focusing on is the fact that they have recurring revenue from their Starlink business. They have a dominant launch provider central to the U.S. space program. And of course, they have access to enough liquidity to keep funding that AI expansion. So it's a unique investment grade rating here, but one that, at least for right now, investors are putting their confidence behind.
Bailey, on yesterday's program, BI credit analyst Robert Schiffman said equity investors trade on hope. Looking at the stock, now up almost 3% in the session, but briefly in negative territory. We're all talking about it hitting its trading debut price. What's going on in this post-IPO trade?
Ed, we're just still seeing supply and demand trying to be matched. Obviously, you had the euphoria of listing day, retail traders continuing to plow through the stock last week. As we saw it hit a bit of an air pocket and we see the volatility today, we still have to remember that we're only looking at about 5% of the float available for trading. So we're still well ahead of the lockup when insiders and long-term investors and long-term employees are able to be selling the stock. So the big question now going forward is, what is the catalyst to keep buying? As you mentioned, we saw some volatility on an intraday basis. That's kind of par for the course. And if we look back a few months to Cerebras, a really strong debut, a lot of chop, and then kind of settling out in the few months ahead of their first earnings report as a public company. So when you're just looking at this, again, it's kind of typical playbook that we've seen with a lot of these high-profile, highly anticipated IPOs.
I would say that maybe one catalyst is they did this demo, the Starfall mission, where they had this reusable capsule in space. The idea is it was a demo for in-space manufacturing. Maybe not. We'll get into that later on. And what I want to understand with this is the significance of the investment grade rating that SpaceX got, because the difference between SpaceX and some of its peers in that domain is this is a company that's going to be burning cash and with negative free cash flow for a really long time. How does that work?
Yeah, that's exactly right. They've really been treated differently here with the investment grade rating. They're not like these other companies that are coming to the investment grade bond market. Typically, you expect like a utility company. So this has been, at least according to our reporting, what ratings analysts have said, a difficult credit to rate. But again, it goes back to that recurring revenue that they have from other parts of their business. And this idea here that this is investors taking a leap of faith, Ed, just like the equity investors did. The credit sale is also kind of requiring that leap of faith, people putting their trust behind Elon Musk, that narrative spreading from the IPO into this inaugural bond sale as well.
Bailey, we're still talking about the mechanics of capital markets as opposed to like what SpaceX actually does. But this is like an immediate post-IPO period. You just explained that. I think we should therefore talk a bit about the green shoe. So they actually raised more money all told than we initially reported, right? And the reason I bring that up is because when they launched the bond sale, they said that as of June 19th, SpaceX had more than $100 billion of cash. Explain that bit.
Yeah, so with the green shoe, that enables bankers to sell more shares, about 15% relative to the total float. So all told, bringing in north of $85 billion does help bolster the company's balance sheet. But we really were, and Ed, we were breaking some news around this, expecting the company to tap the debt market, expecting the company to refinance some of its loans that it already had on its balance sheet. So this was also well foretold when you're talking to some of the investors as they were meeting with the company in that roadshow. The big question going forward, we do have the inclusion in the NASDAQ 100 early next month. We also will be expecting analyst initiation reports on the other side of the 4th of July holiday here in the U.S. So that'll be something where we can start to see the likes of Morgan Stanley and Goldman Sachs, the two banks that underwrote the IPO, what their analysts are saying. We're going to see some pretty high numbers as it relates to what the total addressable market of space could be. But broadly speaking, we still are in this area where we're waiting for fundamental news. And the thing that's going to be interesting is SpaceX, as we saw with the partnership with Reflection AI, going to lean on its ability to maybe be a little bit of a hyperscaler or supply some of that compute? Or is it going to be a narrative that really does shift to space, Starship, and the other things that the company wants to do as it relates to getting, data centers orbiting the Earth?
Right. I suspect those banks will be bullish. Bloomberg's Bailey Lipschultz and Emily Graffeo, thank you both very much. Tech stocks are under pressure after Korean chipmaker sell-off sparked fears of AI sustainability, despite SpaceX's breakout IPO giving the trade momentum in recent days. Investors worry that the AI boom may not be as durable as previously thought. Marta Norton, Chief Investment Strategist at Empower, Black on Bloomberg Tech. I don't want to put words in your mouth, but SpaceX is off to a good start, and we got volatility, and I think all of those things we'd expected.
Yes, I think that's absolutely the case. So, of course, there was some trepidation heading into the SpaceX IPO. We know those things can be volatile, but early days was a good start. We have some volatility today. I think we should anticipate continued volatility. There are those index inclusions. There's the lockups expiring. So there are some things that we need to keep an eye on as it pertains to volatility there. I think volatility for the broader AI trade too. We know there's been a lot of helium, particularly on the chip side of things, and that creates its own type of price bubble. I don't think it necessarily suggests that AI isn't durable, but it certainly creates volatility in markets.
The headline was Wall Street getting a wake-up call in the AI trade. Is it specifically the AI parts of the market that are vulnerable, or is there just sort of some in aggregate concern about equity markets from a valuation perspective or from where we're trading right now?
I think the risk is coming from a few different places. I do think it's predominantly around AI and the things that have led us out of the concern around the war. So since April 1st, that has been the chip area, memory and semi. So I do think concerns around what we're going to see in earnings, Micron reporting, whether that gross margin expansion is still possible. I think that is a question mark on investors' minds. I also think there is some, marginal concern around what rates mean for equities. I don't look at the broad U.S. equity market, though, as all that stretched. And I also think there is some durability to earnings. So I'm not sure it's a predominant issue, but it's certainly something that's kind of picking away at the sides of things.
If we could go back to what happened in Korea overnight, I think it's just a very interesting case study. So the KOSPI, which had, I think, been the best performing index or benchmark so far this year, basically entered a correction from a record high the night prior, but it was Samsung and SK Hynix that kind of led those declines. As a strategist looking across asset and looking at US equity markets, what's your interpretation of what happened there?
Well, I guess my perspective is that, to your point, this is the best performing market that we've seen year to date. There is an enormous amount of hardware AI exposure in that market. There's been enormous amounts of enthusiasm over the supply constraints and just kind of the, this is a different type of cycle than we typically see in that part of the market. And I think investors have just been pulled in and caught up in the enthusiasm. And I think there's room and rationale to expect continued moments of doubt like this when you have prices, rising triple digits.
Our top story is probably the SpaceX bond sale, a 5-part offering we expect to price today. We talked a lot in the last 24 hours on the show about how there is a difference between the psychology and also methodology of an equity investor and the credit investor. But is there something that links those two? What we learn about SpaceX's business through its ability to tap debt markets that might weigh on the equity as a consequence?
I do think there's a connection in this particular instance. Now, I absolutely agree with that view that credit investors are different than stock investors. There's a little bit more downside awareness, a little bit more protection on the fixed income side than on the equity side. And yet when we're looking at something like SpaceX with so much of its value future loaded, I guess I would say, it does seem, given the enthusiasm that we're seeing around that issuance, that bond investors are taking a bit of a cue from equity investors and embedding a bit of hope in their expectations for how SpaceX might perform on the debt side. And of course, I think a broader point is just how much money this is going to take to realize some of the Elon Musk ambitions when it comes to SpaceX.
Empowers Marta, Norton, a market's perspective, but you always roll with the biggest technology stories of the day. Thank you very much indeed. Now, coming up, we're going to speak with Siemens CEO Roland Busch on bringing AI from a digital world into the physical, a conversation really looking forward to. That's next. This is Bloomberg Tech. AI is moving beyond chatbots and onto the factory floor, helping manufacturers boost productivity, with industrial AI becoming a bigger part of the conversation. Joining us now is Siemens CEO Roland Busch, who recently met with European Commission President Ursula von der Leyen and other tech leaders to discuss AI's role in Europe's industrial future. But I would note as well, Roland, you were the first conversation I had this year. We started 2026 with Jensen Huang talking about the transition into the physical world. Just very simply to start, why Siemens is betting so much on industrial AI?
Actually, because Siemens is really geared for this moment to bring AI into the real world. We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June. Is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting shop on the shop floor, and the cutting is not precise anymore, now an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go. And you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%. So this is real fact. And now we're introducing another function where electrical design comes also into the place. So that's a real, and this was not available in the market so far. We brought it to the market and ready to expand to other use cases too.
Either by geography or by sector, is there a market where there's just more speed here? You know, we reflected on your meeting with the European Commission. Notoriously, red tape can get in the way. Like, what are you seeing in different markets around the world? I mean,
the hottest market, as you can imagine, currently is AI factories and data centers. And here we are really in the design phase. Together with NVIDIA, we create a blueprint, a white paper for how an AI factory in the future looks like. And guess what? It's based on a digital twin. And this digital twin is optimized with AI, obviously. But if you talk about other markets, for example, the fast-growing markets which really need productivity and speed, semiconductors, a lot of investment going there. There are a lot of fabs built. Pharmaceutical, there's a lot of investment also going to the United States. Aerospace and defense, we are ramping up our capabilities to produce stuff. So there are a lot of sectors. And then last but not least, I mean, the car industry is also under pressure. They need to evolve faster, having faster cycles, being more flexible in their production. So I can go on and on. And the topic is always the same. You will be faster in your design process using AI, coming from simulation, which verifies, to simulation, which creates new designs, and all the way in the factory, where you down to the point that you are deploying more and more robots. And guess what? Robots are also AI-based automation devices.
Siemens has an almost 180-year history as an industrial company, an engineering company. You know, the sense I've had from you, Roland, in the times we've spoken over the last 12 months and more, is you are positioning Siemens as a technology company. How will your investments, your attitude towards M&A reflect that? And when you think about the market of today, the volatility we see in the technology sector, do you think that Siemens is being treated and valued as a technology company?
Well, the short answer to the last point, not yet, but we are working on it. But here comes the point. Over the last 15 years or so, we invested $30 billion in building up our software suite. It's the most comprehensive digital twin can be built with Siemens technology. And it's a physics-based digital twin with a photorealistic representation using NVIDIA technologies, for example. So, and that's unique. All in all, we have 9.4 billion in 2025, 9.4 billion euros in digital revenue, including software. We are going to double it until 2030. So, and this is a fast-growing, high-margin business. And it's now even supercharged with AI. We rewrite our software so it can be used by engineers and agents. So that means you can see higher growth rates because you can democratize it. And we're accelerating simulation. And again, we are supercharging our operation software on the shop floor with AI technology. So yes, we have the advantage, again, to combine the real and the digital world. You need both. Hardware is more important than ever. Think about the data centers built. Think about how robotics go to the market, to the shop floor. So therefore, this combination is unique. And we keep on going investing. It's a transformation. You mentioned it, almost 180 years. We're in the fastest transformation in our history. And we are on the right track, but it requires, again, a super fast adoption, but also of our customers, which we are supporting.
Fresh from one of Europe's biggest keynotes, fresh from a meeting with Europe's most important leaders, Roland Busch, Siemens CEO, back on Bloomberg Tech. Thank you very much indeed. Now, coming up, Qualcomm is in advanced talks to acquire Modular. More on this multi-billion-dollar buying spree in AI software. The conversation's next. This is Bloomberg Tech.
It's time now for Talking Tech. I'm Yahara Anand. First up, the ongoing debate over AI replacing human workers just got a reality check. Oracle's latest annual filing disclosed that it slashed 21,000 jobs over the past year, with AI deployment across operations driving some of those cuts. This is Oracle is under financial pressure due to an expensive AI data center build out. Plus, SoftBank's Masayoshi Son is choosing Earth over space. Son publicly dismissed Elon Musk's grand vision for orbital data centers, calling the math behind them a losing bet. Instead, he says SoftBank will focus on building formidable data center capacity here on Earth. And Tencent is scaling back its global gaming empire. The Chinese tech titan is in negotiations to unwind its massive post-pandemic buying spree by offloading minority stakes in multiple international gaming studios like Japan's Marvelous, all to free up capital for none other than the global AI race. Ed?
Thank you very much, Yahira. Now, Qualcomm is making a multi-billion-dollar play to seize on technology and talent at the cutting edge of AI. Sources tell Bloomberg the company is in advanced talks to acquire software company Modular for about $4 billion. Bloomberg's Ryan Gould broke the story with the team and joins us. Let's start with the basics. What do we know about the deal?
Yeah, so they're in advanced talks to acquire Modular for about $4 billion. It looks like that deal could be announced as soon as the coming weeks. I think, Ed, this is part very much of this wider AI race in AI for inference technology. Basically, that's the process where you go from training models to actually putting them into production. And we've seen, I think, probably bookended by both the Grok NVIDIA licensing deal that announced just before Christmas. We all remember that on Christmas Eve. And maybe also the Samba Nova deal with Intel and Vista Equity Partners, the private equity firm. This is just really an arms race right now to see how quickly we can start to lower some of these inference costs for enterprise.
What do we know about Modular in terms of like who's already on the cap table, where they've been valued in their own private market activity?
Yeah, I mean, there's quite a few famous VC firms in there, really. I mean, Google Ventures, General Catalyst. General Catalyst is in there for quite a significant chunk of the money. They were valued at just over $1 billion last September, I believe. So this would kind of be a fairly quick turnaround for those guys involved there. And I think this kind of also gets at something else, which is we've been hearing that Qualcomm has been looking at companies like Tenstorrent, again, another player that sort of sits in and around this inference AI sphere. Modular itself, though, I mean, really is that software layer. It's putting those hardware chips and making them accessible across all different models. So that's ARM, Intel, NVIDIA, and in this case, soon to be Qualcomm, should this all come to plan.
Bloomberg Deals is Ryan Gould. Thank you very much indeed. Now, coming up, Venky Ganesan from Menlo Ventures joins us. Talk about the firm's largest fundraise in its history and how backing AI startups is forcing, frankly, a shift in strategy, a really big and extended conversation coming up alongside Bloomberg's Natasha Mascarenhas. It's halftime here in San Francisco. This is what markets look like. We're off session lows, but technology's selling off. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Tuesday, June 23rd, there's a lot going on. Our top stories, the AI sell-off and SpaceX's bumpy ride. Tech equities reporter Carmen Reinecke standing by in New York with all of it. Carmen.
Ed, yeah, so we're seeing a lot of red on the screen here today. The Nasdaq's down almost 3%. The biggest laggards here are memory names. So we know this was kicked off in South Korea when a local media report said that SK Hynix may be sort of pulling back on its AI chips, maybe shifting to DRAM a little bit. That sent the markets tumbling, and it sort of gave some pause to the AI trade that we've seen. So we can see the biggest laggards here: SanDisk Corp, Micron Technology, and Lam. So these are all memory names that are dragging that market lower. Let's also take a look at SpaceX today. So shares actually seeing a little bit of dip buying, perhaps. Yesterday, we saw a pretty concentrated sell-off, the third day of declines. It wiped more than $400 billion in market value from the stock. That was the second largest one-day erasure of market cap in history, following only NVIDIA, and brought the 3-day decline to more than $600 billion in value. So seeing more green on the screen here today, shares up about 2%, just off session highs. Few key levels we'll be watching. One is that $150 line. That was where the stock opened at its trading debut. And the other one that we'll be looking at is a $2 trillion valuation. We're just sort of flirting with that level right now. Back to you, Ed.
Bloomberg's Carmen Reinecke on what's going on in tech in public markets. Let's get to private markets. Some of the big venture winners from the SpaceX IPO are cashing in by raising new funds. That includes Valor Equity Partners, founded by longtime Musk ally Antonio Gracias. According to sources, Valor's Fund 7 will have about $2.5 billion to invest in startups and more SpaceX shares. Bloomberg's Carmen Arroyo joins us with the details. Let's start with the SpaceX part. I find that so interesting. You know, one of the big winners from the biggest IPO in history, we went over that. But part of the strategy of new funds is to put them back into Elon Musk's company.
So Valor is now out there raising $2.5 billion for this fund. But the quirk with it is that the fund has already allocated a portion of the funds into SpaceX shares, which is kind of interesting because SpaceX is already trading. But the Valor has been fundraising for the past few months. It's not happening, like it's been happening since like late last year.
Where does 2.5 billion sit in the scope of Valor's broader assets that it manages? Like, this is a big firm, right? And particularly remind us the return or the payoff of the value of their stake in SpaceX post-float.
Right. Yeah, Valor's like said to have a massive windfall of like the 4% stake in SpaceX, but they're mainly an operational firm, right? They like to lend resources to the companies they invest in. So they have like very targeted investments. So they've been in all of or a lot of like the Elon Musk's ventures, but they also have a lot of consumer companies as well that they're invested in. But I think it kind of shows how much demand there is right now for kind of like being part of the winners.
Bloomberg's Carmen Arroyo, thank you very much. Let's take a look at today's big number, $50 billion. That's how much Abu Dhabi's MGX has raised from regional and global investors to accelerate spending on AI infrastructure and technology. That's according to sources who also say the firm has already deployed capital from the new fund, which closed in recent weeks, and that it ranks among the biggest ever dedicated AI investment vehicles. More on venture capital and private markets a little closer to home. Menlo Ventures has raised $3 billion for new AI investments, the biggest fundraise in the firm's 50-year history. The move reflects just how dramatically venture capital is changing as investors race to back the next generation of AI winners. Bloomberg's venture capital reporter Natasha Mascarenas broke the story, and she joins us alongside Menlo Ventures partner Venky Ganesan. And here we are in San Francisco. I start with a really basic question, Venky. Why raise the $3 billion?
First of all, Ed, Natasha, thank you so much for having us here. It's a privilege to enjoy this special moment with you all, 50-year history. I think this moment, to me, really reminds me of the Renaissance. Like, I think when I look at the history of mankind and look at what happened in the Renaissance in the 1400s, AI is that moment where we actually have a new technology coming in. We have this incredible density of talent. It was in Florence in the Renaissance. It's in San Francisco with AI. And you have these patrons and the Medicis funding these incredible artists, whether that's Da Vinci, Donatello, and the equivalent of that would be Dario and Denis. And so I think like that moment is here.
This is a new thesis to the show. Keep going.
And to me, our 50-year history meant that we have had this history of finding these moments. And for Menlo, it's a special moment to be able to have that capital to fund these incredible entrepreneurs. There is an amazing 18-year-old woman out there who's thinking about starting a company, and I want her to know that we are ready with our capital to fund her.
Speaking of history, I mean, this is not the first time we've seen Menlo Ventures raise record funds. I know in the past, in 2005, Menlo raised a $1.2 billion fund, eventually to cut it back down to $400 million to get back to the roots. So what's different this time? What defends the choice to grow the fund size? Really also talk to me a little bit about strategy and sort of how you plan to invest such a big amount of capital.
Great questions, Natasha. I mean, to me, it's all about making sure we have the right capital for the right moment. So I believe that we have a Goldilocks strategy. We are big enough to be able to fund all the companies that matter, yet small enough to drive venture rates of return. And that's really been our focus. We want to be driven by scarcity, so our strategy fits that. And we want to find the companies that really matter and then concentrate on them.
Is this what you call avoiding the middle, the venture capital middle?
Exactly. to us, we want to be in the barbell. We want to be in the earlier stage where we can fund amazing entrepreneurs, pre-product market fit, but get high ownership. And then we want to back the clear winners, like we have done with an Anthropic, a Lovable, and Open Evidence, companies that are scaling and making a difference.
How much does experimentation show up in check writing these days? I know Ed and I have spoken a lot about coconut seeds.
Yeah, what's the point of a seed round, essentially?
Exactly. Like, how do you think about that?
Yeah, actually, it's funny you mentioned it. We actually came up with a new seed strategy where we wanted to be nimble. So we set aside a small group of dedicated partners, people like Tim Tully, the CTO of Splunk, Geoff Redfern, the Chief Product Officer of Atlassian, Matt Craning, Didi Das, very dedicated group of people, and had a different focus. We could actually make an investment with a smaller group of people without going to investment committee. So I think experimentation has been a very core part of our 50-year history. We have always wanted to make sure that we are changing with the times, right? The most important thing is you got to change with the times. We've also experimented by funding neolabs. And so that's also been an area of focus for us.
Funding neolabs, giving founders access to compute, moving away from certain areas. Right. Biology, for example, or not moving away, paring back the focus. Unpack all of that.
Yeah, I think when I think about it, we probably moved away more from like fintech and SaaS and more to AI-centric areas, right? And so to me, biology could be one of those areas in which AI makes a huge impact. I mean, look, the most important things we can do are to help lengthen human lifetime and improve the quality of life. I think AI is going to make a big impact in drug discovery, and it's going to have one of the most positive impacts on healthcare.
You know, you said something to me during our interview. This didn't make the story, but you said, you know, in order to win in venture, you have to be contrarian, you have to be right, and you have to be alone. Where in AI is Menlo right and alone right now?
I'll tell you, we were right and alone in 2023 when we led that round in Anthropic. Kudos to my partner, Matt, who saw this opportunity. Matt, Tim, they saw that this was going to be a special company. If you remember at that time, everybody talked about OpenAI and Microsoft. They said the game was over. OpenAI was the clear winner. Look, OpenAI is a great company, but we had the conviction to put $500 million in an $18 billion round, and I think a lot of people didn't want to. And that's what I mean is you got to be contrarian and right. It's not the first time. We did that with Siri. We did that with Uber. We did that with Roku.
The state of play is really different now. We're going to talk a bit more about the field, you know, after we take a quick break. Something you said about the 18-year-old. Maybe it's not an 18-year-old, but what we're seeing is rounds where there are maybe a few founders, alumni of existing frontier labs or academics. They're raising hundreds of millions of dollars from the get-go, and the venture firms seem to be making a bet on those people, their expertise and their credentials in the field. Is that where you expect this to go?
Yeah, I mean, to me, it's more about making sure it's not about 18 or 80. It's about finding the right person. I think what is different about this time is that a lot of the right people are researchers, which is different from what traditionally has been the focus. And so a thing we spend a lot of time at Menlo is thinking about how do we identify these people? What are the characteristics that make this? We've used a lot of data and AI internally. So I would say we are not all in on AI. We're also all in on AI internally to how we build the firm. And we use that to identify the people. And then when you find them, we act with conviction.
I talked to the CEO of Axiom for my story today, who's building a
Talk about a 21-year-old math genius.
Yeah, I mean, and something she said that was interesting was that, you know, having technical debates with your VCs is actually a hugely valuable add in this moment. A lot of people invest in AI, but a lot of people can't have those debates. Like, talk to me about how you personally are staying up to date on AI and how you're getting competitive intelligence right now. Where are you finding, you know, these founders between 18 and 80?
Yeah, I mean, to me, first thing is to be able to do that, you got to have the right technical people in the building. And so we spent the last 4 years making sure that we built the right technical team. We talked a little bit about Tim, our co-founder of Splunk, Didi, Matt Craning, Geoff Redfern. And then we got to use the technology ourselves. One of the things we did was, and I think you mentioned this in your story, we put microphones in a lot of this so that we could use a new product called Whisper, another founder that you're familiar with. And so the idea is we got to use the technology, we got to drink our own champagne, as I like to say, and then make sure that we are there, ready to meet the founders where they are.
Okay, Bloomberg's Natasha Mascarenhas and Menlo Ventures' Venky Ganesan are going to stay with us. We're going to take a quick break, then we're going to get back to the competition in the field of frontier labs, valuations, and muscling in a world where the mutual funds, the strategics, and everyone wants a piece of that pie. Stay with us. This is Bloomberg Tech. Menlo Ventures calls its early investment in Anthropic a bet the firm moment. At the time, all the way back in 2023-24, Anthropic was viewed as a distant challenger to OpenAI. Today, that wager stands as one of the most consequential investments of the AI era. But the field and world is different. Bloomberg's VC reporter Natasha Mascarenhas is still with us and has been reporting on that along with Menlo Ventures partner Venky Ganesan. I say the field is different. When you did that Anthropic round, and in the last block we talked about how consequential that was, everything happened very quickly thereafter. Many frontier labs raised money regularly, and those joining the cap table were different. They weren't venture firms. They were mutual funds, legacy Wall Street institutions, hyperscalers, other strategics. How does that change impact a firm like Menlo?
It changes because it brings in a whole set of new players, but I think they bring good perspective. We have looked at this as an opportunity to collaborate and find people who can. Look, when you have a gold rush, everybody rushes in, and I think it takes a lot of capital to build these companies. These founders are special. You spoke to Karina of Axiom Math. She has raised now over 150 million. And I think the way to make, they say it takes a village to raise a child.
Right.
It almost takes a country to raise one of these AI companies. That's the amount of capital. And I think we welcome the chance to collaborate with some of these folks, and they've been great partners.
Bring me back into that moment of deciding to bet the firm really on Anthropic. I mean, my reporting says that Menlo has put around $1 billion into the company, a stake that is worth nearly $14 billion. That's according to sources familiar with the matter. I mean, that kind of return is exciting. It's also the kind of thing that I'm guessing you guys are looking to replicate. So, what's the takeaway there, and what are you looking? How are you changing the way that you write checks?
I think the formula is simple, right? And this has been the same formula that's worked for our last 50 years, which is go deep into an area, build a thesis, find the best company that you can, commit to that founder, and then partner with them to build with conviction. And every one of those things happened with Anthropic, in the sense that we looked at the entire AI landscape. We zeroed in on this very, very special founding team of Daniela and Dario and the 6 other founders. And then my partner, Matt, said, we got to lean with conviction. We all rallied around it, and we raised the biggest capital we ever have. And then we have committed to build the company with them. And to me, that's the same formula we did with Uber, we did with Roku, we did with Chime. And I think the same formula we'll do in the future. We'll be selective. We will find, we have a Goldilocks strategy to be the right size. And then when we find the right company, we will lead with conviction and concentrate on them.
What do you make of the king-making, queen-making strategy that's across Silicon Valley, the idea of sort of anointing a winner early on by putting a lot of capital into them? That is quite different than the Anthropic bet that you guys made. It was definitely, pre-revenue and pre-household name.
Although he did call Dario the Da Vinci of this age, so I don't know. Sorry.
No, but yeah, I'm curious, I guess, the idea of, trying to find that company, not when it's at, a multi-billion valuation, but when it's at a 50 million valuation and helping it hit those huge numbers.
So first of all, I love the fact that you said queen making. We have 3 daughters, and my wife is definitely the queen of our house. So I like that. And to us, you're right. The way I think we think about queen making is to really find those companies early. And we have found plenty of those. So while we love Anthropic, it's an amazing company, I literally talk to my investors about the 10 AI companies, not named Anthropic, we are excited about. A company like Axiom Math, where we found Karina, invested in her very early on.
Open Evidence,
Whisper AI, which I know you have a connection with. All Lovable. These are all companies we have found early. That's really been Menlo's focus. Find them early, partner with them, size up with conviction, and then build.
I don't want to put you in a position where you can't speak freely, and I get that Anthropic's filed confidentially, etc. But it seems like there are 2 stories that are both true at the same time. companies are staying private for longer, and yet we are on the cusp of a very big IPO window. How do you interpret that moment? And also, like, the thing is, it's not just that private companies are staying private longer. The private markets seem very willing to support that duration and the level of funding that they need.
It is very much true that the private markets are probably the biggest I've seen in my lifetime, right? I've been doing venture capital now for my 30th year, and they're deeper, and this allows companies to stay private. Though I think eventually my feeling is a lot of these companies should go public for a couple of reasons. One, we do want the public to participate. I think it's very important that in this AI revolution...
You see it as democratic?
Yes, I think, and I think it's good for society to be able to participate as a wider group. I also think that going public creates discipline for all these private companies. Ultimately, sunlight is the best disinfectant, and there's no better sunlight than going public.
Menlo Ventures partner Venky Ganesan and Bloomberg's Natasha Mascarenhas, who has detailed the firm's history and its latest fundraise, $3 billion in funds to back AI startups, on the Bloomberg this morning. Thank you very much. So coming up, Meta is joining the wearables game with its own smart glasses, launching 3 models that are cheaper and fashion forward, my producers tell me. We'll discuss. This is Bloomberg Tech. Meta is launching its own smart glasses under its own brand for the first time after popularizing wearables through Ray-Ban and Oakley partnerships. The tech giant's glasses are cheaper, and even, they keep writing this, the team, fashion forward, with one model made in collaboration with Kylie Jenner. Bloomberg's consumer tech editor, Mark Gurman, has the details. That's the distinction, right? This is Meta all the way through, still manufactured by EssilorLuxottica. But for you, in your reporting, like, what is this as a moment for the wearables category and the smart glasses category?
It's interesting. At the end of 2027, Apple's going to introduce N50, that's what it's called within Apple, but that is the Apple smart glasses. And of course, the way Apple is vertically integrated, they are going to be designing and branding the glasses, under the Apple name, using their own design team. Meta has been licensing designs or working with EssilorLuxottica and basically taking Ray-Bans, Oakleys, and they're planning other brands like Prada and making those smart. And for the first time, what Meta is doing is they're launching their own Meta-branded glasses, right? These are not Ray-Bans, these are not Oakleys. These are Meta-designed glasses by the Meta industrial and hardware design team within the social networking giant. And so that is a big change for them. And by going internal, going in-house, that allows them to come out with a low-end and entry-level tier for their smart glasses. If you remember, at the end of last year, Meta raised the prices of their smart glasses with the second-generation model, and so the entry level of the Ray-Bans, the smart Ray-Bans, costs about $380. These ones that I'm wearing, these are the new Meta-branded ones.
Those are wearing them?
I am wearing them, yes. Normally I wouldn't be wearing glasses on here, but I had to bring these out. I just got this pair last night from Meta. So these are $300. So that comes in at $800 less. So that's the big play here, bringing something that is a bit more affordable to market by using their in-house brand and design.
Okay, so we have definitively answered the question whether or not these are fashion forward. They're fashion forward.
I look great.
Mark Gurman modeling them now. You look great. Let's get into the technology part. We only have 30 seconds, but the capability of these relative to what Meta already had out there.
Oh, they're identical. They're the same. But the cool anecdote I can give you is that Meta seems to be seriously considering launching versions of its glasses without cameras. Now, that creates a few interesting wrinkles here. One, that'll allow them to create new designs that are maybe slimmer and lighter with more battery life because fewer components needing to be dedicated to the camera system. Also more privacy conscious, and no cameras, audio-only experience also means cheaper.
Right. Bloomberg's Mark Gurman, who leads our consumer technology team on the Meta glasses. Thank you so much. That does it for this edition of Bloomberg Tech. Really packed show, a lot going on in public markets and in private markets in the world of technology. Recap all of that on the podcast. You can find it on the Bloomberg terminal as well as online on Apple, Spotify, and iHeart. Have a great day. This is Bloomberg Tech.